Ethereum feels like the biggest underachiever of the bull run so far. ETH and ETH-aligned assets have seemed to lag well behind Solana through most of the early bull run. And with that, the vibes and the narrative have shifted away from Ethereum and towards these competing platforms. But now the unexpected approval of the spot ETH ETF may signal a change in fortunes for the second largest crypto asset. And that's what I want to think about today. Just why has Ethereum performed so badly this far? And will the ETF be enough to turn things around? As always, none of this should be taken as investment advice, nor is it a suggestion or recommendation to buy ETH or any other crypto asset. And remember, if you do choose to buy anything in crypto, it is incredibly risky and you can always lose what you put in. But with that warning out the way, let's get into it. Price and narrative are deeply entwined and highly reflexive. Price drives narrative, and narrative drives price. When an asset's price changes, people like to attribute that change to a particular reason or narrative. And that narrative can attract additional capital which will amplify the move. In the right circumstances, this creates a great flywheel effect. The asset's price will keep moving in one direction, and the vibes around the asset will strengthen. This is why we need to look back to the beginning of the bear market to understand the beginning of Ethereum's troubles. See, Ethereum held up relatively well through the bear, outperforming the vast majority of crypto assets. Crucially, it also bottomed earlier than most, hitting its lowest price during the 3AC crash in June, rather than the FTX collapse in November. That meant that ETH felt like it had more momentum than most assets through the bear, and the vibes around it were generally good. But there weren't so many people around at that time to appreciate this and buy in, and so the flywheel never really got going. At the same time, the relative outperformance in the bear meant that ETH was closer to its fair price compared to most other crypto assets. As markets improved, it had less ground to recover and less room to run. Once again, the flywheel wasn't started because there wasn't sufficient price action to drive it, even though the overall market sentiment had improved. Compare that to one of the cycle's more hyped assets, like Solana. Solana had been beaten into the dirt during the bear. Its association with FTX meant that it sold off hard, generating the narrative that Solana was dead. Some projects even abandoned the chain altogether, furthering that sense of despair. All of this meant that Solana was starting from a much lower place as we entered the bull market. Sol's price was dislocated so far from its fair value that it was able to rally hard as soon as the market sentiment turned. That created a sense of resurgence, which is backed up by Solana's true believers delivering new developments and rebuilding the ecosystem. The narrative was therefore easy to build, easy to believe, and easy to buy into. And that's exactly what many investors and traders did. They piled into Solana and drove Sol ever higher. For Solana, the flywheel was firmly in motion as the bull market began, while Ethereum seemed to be stagnating. If Ethereum had performed worse throughout the bear, and therefore had more room to recover, the vibe around it would probably be quite different today, even if the price ended up in more or less the same place, but it had the wrong price action at the wrong moment in time. As it happened, Ethereum wasn't able to capture any momentum or attention as the bull market began, rendering it an also-ran in a fickle and forgetful market. A short and fairly understandable period of underperformance was all it took for the bad vibes to begin and a sense of malaise to set in. Worse still, the assets that experienced the biggest flywheel effect in the early bull market were the worst ones from Ethereum's perspective. Ethereum has always occupied a slightly strange place in the market and has a difficult time positioning itself properly. On one hand, it's a smart contract platform and therefore ostensibly a tech play in competition with other platforms like Solana or Avalanche. On the other hand, it's very focused on robustness, reliability, decentralization, and creating a strong and sound money. That places it firmly in competition with Bitcoin. It also creates a sense of conflict in Ethereum's design, as it struggles to bring these competing aims together. Ethereum must be relatively conservative in order to satisfy its Bitcoin-like desires. That means it's unable to adopt a high-throughput, low-fee design like many other smart contract platforms. And yet it will never be as simple or conservative as Bitcoin itself. It must fight on both fronts with a hand tied behind its back, so it's already at a disadvantage. And then, as the bull market began, it was Bitcoin and Solana that performed the best and gained the most attention. They took narrative dominance, squeezing Ethereum on both sides. The idea of Solana's resurgence made people think it could steal Ethereum's thunder as the leading smart contract platform. Its low fees and initially superior user experience made it feel like the future. Why would anybody want to build on or use Ethereum if they could do the same sort of thing in a faster, cheaper, simpler, and altogether better environment, especially when most people don't care about moneyness and decentralization like Ethereans and Bitcoiners do. At the same time, Bitcoin is being propelled by both ETFs and its burgeoning ecosystem that consisted of ordinals, fungible tokens, and proto-L2s. The ETF narrative gave a sense that Bitcoin was the only serious asset in crypto that institutions could get behind. The digital gold argument seemed to be finally paying off as billions of dollars flooded into the newly launched funds. Meanwhile, the growth of ordinals proved that Bitcoin could be used for more than just money. Like Ethereum, it might also be a foundation for more complex computations and transactions. If it could do that while being more conservative and more economically sound, then what would be the point in Ethereum? Surely anyone who truly cared about decentralization and robust, reliable blockchain designs would pivot towards Bitcoin. And if all of that wasn't bad enough, Ethereum was also suffering in its relatively new modular narrative as well. Ethereum is supposed to become the base layer of an expansive, interconnected universe of chains and high-layer scaling solutions. But that wasn't its original plan, and it's slowly moving in that direction one upgrade at a time. But then Celestia launched, a new modular chain specifically built to serve the kind of role that Ethereum will eventually fulfill. And like Bitcoin and Solana, it performed very well financially and narratively in the early days of the bull market. Once again, Ethereum was made to look a bit pointless. Almost every Ethereum narrative was being undermined simultaneously, compounding the lingering negativity that came from its own mediocre price action. The excitement and attention had all moved elsewhere, and Ethereum was left feeling like a purposeless relic of the past. In my opinion, this narrative assault is the primary reason why people are so down on Ethereum so far. Its very existence, its reason for being, had been called into question, and without a surge in activity or price, it wasn't able to give a convincing answer. Another contributing factor to Ethereum's lackluster price action and resultant negative vibes is the lack of buyers coming to support the price. Again, this is a case of Ethereum's previous strength coming back to haunt it. In the previous cycle, Ethereum was the consensus bet. ETH was almost the default asset for anyone who was serious about crypto. Bitcoin, the former consensus play, had started to feel a little too old and out of touch. It was generally viewed as a played out pet rock with relatively little growth potential compared to other crypto assets. Meanwhile, ETH was at the centre of a rapidly expanding ecosystem and was touted as the future of finance. And though there were other platform plays like Solana with even more growth potential, only Ethereum came close to matching Bitcoin's longevity and dependability. From a risk-reward standpoint, ETH was the clear best. For once, Ethereum's usually conflicting narratives seemed to synergize to make it the perfect play for anyone bullish on crypto. You knew it wouldn't let you down or run into fundamental problems, but it was still exciting and rewarding. At the time, this was great for ETH, and it probably contributed to its outperformance throughout the bear. But fast forward to today, and it's become a problem. Almost everyone who has been involved in crypto for some time already has ETH exposure, and if they don't, it's probably because they have a good reason not to, usually because of irreconcilable philosophical differences. Put another way, most people in crypto either already own ETH or never will. As the bull run began, the people who already held ETH weren't given a reason to buy more. Why would they prioritize an asset that they already held when so many under-owned assets looked so attractive? If anything, existing holders were likely to sell some of the ETH that they owned for assets with more short-term promise, resulting in even worse price action for Ethereum. With little support from crypto natives, ETH needed tourists and newcomers to step in. But the market wasn't flooded with new capital as many expected. In fact, we're still waiting for general interest in crypto to pick up, and for the next cohort of users and investors to arrive. Without them, it's understandable that ETH would struggle with a lack of buyers. To start performing better, ETH needs to give its existing holders a reason to increase their allocation, or it needs to find some entirely new buyers. Hold on to that thought, we'll come back to it in a bit. Making matters worse, the few dollars that did enter Ethereum's atmosphere were scattered across multiple assets. This is because there is now a plethora of Ethereum-aligned assets that could be viewed as ETH beta, alternatives that should outperform ETH itself in a bullish environment. Therefore, anyone who is bullish on Ethereum must decide the best and most profitable way to express that view. For instance, an investor could opt for layer 2 tokens like OP and ARB, or they might consider staking related tokens like Lido, or potentially tokens from Ethereum's DeFi, NFT and RWA ecosystems, like Uni, Blur and Ondo. Perhaps they'd even like Ethereum-based meme coins like Pepe or Mog. There are so many different avenues to go down, and so many different assets to consider if you're bullish on ETH. Even if you want to keep things simple and just own ETH, there's still a decision to be made about whether it's better to own native ETH, liquid staked ETH, or liquid restaked ETH. And all of this creates decision fatigue, which could put some investors off. Worse, it causes any incoming funds to be diluted across a variety of assets, reducing the stimulative effect that the cash could have. Of course, ETH isn't alone in suffering from this. After all, investors must weigh up the pros and cons of buying Sol over WIF or Bonk or Pith, but the ecosystem around Ethereum is much more developed with many more options, and that means the dilutive effect is much more significant, and that certainly didn't help when Ethereum was already on the back foot. Adding to all of this was the concern that ETH would be declared a security by the SEC. I'm sure you've seen the rumblings about the investigations into the Ethereum Foundation and concerns about proof of stake making ETH a security. Those fears would certainly have weighed on ETH and hampered its performance. It was going against years of conventional wisdom that said that ETH was a commodity and therefore safe from the SEC's attacks. Now, markets had to consider and price in worst case scenarios like ETH being delisted from major exchanges. Plus, it threatened to undermine Ethereum's appeal to institutional investors. After all, they probably wouldn't want to buy into something with so much uncertainty around it. And that's if they could access it at all without an ETF wrapper. See, once the Bitcoin ETF had been approved, people automatically assumed that an ETH ETF would follow. It may have taken another lawsuit to force the SEC's hand, and so it could have taken a year or more to become reality. But it looked pretty certain, and it gave ETH a tiny glimmer of light at the end of a very long tunnel. But the security concerns dashed those hopes almost entirely. Ethereum's pessimistic and gloomy atmosphere grew ever darker, and it felt like Gary Gensler and the SEC were kicking something that was already down. The final thing that I wanted to mention was the difficulty that Ethereum seemed to be having in campaigning on ETH's behalf. There are two prongs to this. First, a lot of Ethereans have migrated from Twitter to Farcaster over the past year or so. Even if they haven't transitioned fully, they're spending much less time on Twitter. And yet Twitter remains the focal point of most crypto culture. With fewer Ethereans about to argue their case and get the message across, we end up experiencing a slightly warped version of reality that is shaped and dominated by Ethereum's detractors. The negatives are presented much more frequently than the positives, which contributes to and exaggerates the sense of pessimism around Ethereum. The second is about Ethereum's research-heavy mentality that some may find off-putting. When Ethereans are seen discussing things on Twitter or elsewhere on social media, their conversations are often unrelatable and jargon-heavy. It leaves potential users feeling alienated and maybe even annoyed. For instance, users might understandably complain about relatable problems, like high transaction fees making small trades impossible. But then they see prominent Ethereans throwing around incomprehensible and slightly ridiculous terms like proto-danksharding. It makes them feel like their problems aren't being taken seriously. Now, I don't want to be too critical here. Ethereum and blockchains in general are pretty complicated and involve lots of difficult trade-offs that average users just won't appreciate. But equally, Ethereans will never win the narrative war if they continue as they are. As difficult as it may be, they need to find a better way of acknowledging the complaints of average users, whilst also explaining in simple terms why certain design decisions have been made and what is being done to help normal users. To be honest, that may not be possible. Most people don't want to understand why things are the way they are, or they don't have the time to learn it. Instead, they'll just assume that Ethereum is clunky and expensive because it uses old and outdated technology, and they'll assume that prominent Ethereans don't care about these problems because they are rich and out of touch of normal people. In the long term, this probably isn't a big issue. Eventually, if Ethereum's thesis is correct, people will be using low-fee L2s without a care in the world. In fact, they probably won't even know they're using an L2, let alone an L2 within the Ethereum ecosystem. But until all of the difficulties have been abstracted away, people will continue to notice the shortcomings of Ethereum, and they will continue to complain about them. And those complaints will keep contributing to the gloomy atmosphere around Ethereum, and continue to make Ethereans look out of touch. That is, unless Ethereans can streamline their message enough to get their ideas across in a simple, understandable, and understanding way. Together, all of these factors have been contributing to Ethereum's underperformance and gloomy atmosphere in recent months. And the question now becomes, will the ETF approval help to change this? I think it will, or at least it should, as long as macro trends don't get in the way to derail things. And that's because the ETFs should help to address all of these factors. First of all, the ETF approval clears away almost all of the concerns and uncertainty about Ethereum being declared a security. As a result, Ethereum is suddenly unburdened, and a major argument for avoiding ETH has been invalidated. The ETFs will also help to solve ETH's lack of buyers. Not only will it open Ethereum up to a new and incredibly wealthy pool of institutional investors, but it will also encourage crypto natives to buy ETH once again. Many crypto natives will have been caught offside by the ETF approval. They will have sold ETH for more exciting and better performing assets during the early bull run, but now they're underexposed and will want to correct that. At the same time, traders and short-term investors may flood back to ETH as they try to front-run and price in the ETF launch. Then, once the ETFs are live, TradFi dollars will dominate the price action. I don't expect these funds to perform as well as the Bitcoin ETFs, but I think their performance and impact on ETH's price should be relatively similar when you scale by market cap. And over the long term, the ETFs open the door for vast quantities of wealth to flow into ETH and the Ethereum ecosystem. In short, the ETFs should attract new buyers and new capital to Ethereum in both the short and long term. And that's exactly what Ethereum needs to start moving again. We've already seen how price action and narratives are tightly coupled. If the front running and excitement around the ETFs do cause ETH to outperform other crypto assets in the short term, it could be enough to get the narrative flywheel running again. At the very least, a period of positive price action would reduce concerns about competitors like Solana and Bitcoin encroaching on Ethereum's territory. It's silly that price action could shape opinions that much, but it's what tends to happen. But the biggest narrative benefit of the ETF is that it reminds people how special and distinct Ethereum is compared to every other altcoin. At the end of the day, only 2 crypto assets are considered dependable and respectable enough to have ETFs anytime in the near future. This tells us that, alongside Bitcoin, Ether is the only institution-friendly crypto asset. And unlike Bitcoin, which continues to be pitched as digital gold, Ethereum is synonymous with tech crypto. Therefore, anyone in the TradFi world who wants exposure to the most dynamic and high potential segment of the crypto industry will have to buy ETH. Again, we're seeing that blend of time-tested dependability and excitement. The same blend that previously made ETH the default asset for crypto natives. Safe enough to invest in, but still capable of providing massive returns. And with the right marketing, Ethereum could even become more popular than Bitcoin among traditional investors. Most people don't particularly care about gold, so they may not care about digital gold either. But a lot of people like tech plays that are growing fast and generating real returns, which sounds a bit more like Ethereum. TradFi types will already consider Bitcoin to be an exotic asset with a lot of risk and a lot of potential, so perhaps they won't want to push further down the risk curve, even if the returns could be slightly higher. Therefore, I think the chance of ETH becoming the default asset again is relatively low, at least in the near term. But with enough time and clear messaging, it's far from inconceivable. Even if that never happens, the ETF launch will be a huge moment, almost a reset point for Ethereum and its narratives. At the very least, it gives Ethereum a point of differentiation from other smart contract platforms, and buys it some breathing space after Solana's relentless onslaught in recent months. This is something that could help Ethereum to rise alongside Bitcoin and Solana, rather than feeling like it's being eaten up by them. And after months of underperformance and losing ground to the competition, I think a lot of Ethereans would consider just that a win. The ETFs may even help Ethereum's messaging problems. Once the ETFs launch, it will be on the issuers to market their products to potential customers. That means that they will need to explain Ethereum in simple terms, without technical jargon and silly terminology. While it may come too late for crypto natives, it should give TradFi types a better introduction to Ethereum. And who knows, maybe some Ethereans will absorb some of those marketing terms and improve their own promotional efforts as well. The ETFs should also help with the dilution problem. Of course, crypto natives will continue to distribute their funds across a range of Ethereum-aligned assets with the hope of getting the best return, but the ETFs themselves will be constrained to vanilla ETH, and depending on how the ETF launch goes, that could be a huge amount of money concentrated on a single asset, enough to counteract the dilution among crypto natives. From all of this, we can see that the ETFs should address virtually every problem that have contributed to Ethereum's underperformance and gloomy outlook. Some of these fixes will take time to play out, especially things like marketing changes and the introduction of new institutional investors, but we should start to feel the benefits over the next 12 or 18 months. And if that happens, then it's quite reasonable to think that the ETFs will wake Ethereum from its slumber, boost prices, and bring an altogether more positive attitude to the space. But of course, nothing is guaranteed. There are many ways in which this could go wrong, and Ethereum could continue to flounder. Today, people are predisposed to believe anything negative about Ethereum. That's simply what happens when bad vibes linger for this long. And so it will be at particular risk of any downside surprise or even stagnant price action when the funds launch. After all, that would confirm everyone's existing bias that Ethereum's time has passed and Ethereum is dying. In worst case scenarios, that downbeat attitude could even leak from crypto Twitter into the wider world and contribute to weaker demand for the ETFs. I don't necessarily expect that to happen, but people aren't always rational and sentiment can play a big role in investment decisions, even for supposedly smart money. The obvious short-term risks are the ETF inflows being much smaller than expected, or grayscale outflows being much larger than expected. Either way, ETH's price will probably suffer significantly. Longer term, the big issue would be Ethereum failing to establish itself as an interesting or worthwhile investment for TradFi. They seem to have a degree of interest in Bitcoin, and so we're all assuming that they will like ETH as well, but we don't really know that yet. There certainly hasn't been the same degree of clamour for ETH ETFs as there was for Bitcoin ETFs, but that is to be expected. But if there is still no interest or excitement in Ethereum once it's on the main stage and the marketing materials are out there, then Ethereum could be in trouble. The final point that's worth thinking about is, does any of this matter? So what if Ethereum's price doesn't do so well? Ethereum continues to function in the same way regardless of Ether's price. It doesn't matter if it's worth $10 or $10,000 per coin, the network will keep going, albeit with a different level of security. Plus, this is all very short-term focused, and Ethereum is all about building with the long game in mind. Price action, vibes, and narrative are largely noise. They don't make a difference in the day-to-day running of Ethereum. But of course, I wouldn't be making this if that was all I thought. After all, I tend to not focus on price action and short-term things here either. The reason I think this stuff is important is because the narrative and vibes around protocols like Ethereum will play a crucial role in its future success. What seems like irrelevant noise today can eventually become a pattern and set a trend. Nobody will want to build on a chain that is perceived to be dying, and nobody would want to use that chain either, especially if fewer builders appear to create exciting new opportunities on it. It won't happen overnight, but if Ethereum cannot start to perform a bit better, if it cannot change its narrative and start to gain some momentum, then it will leak more and more activity to competitors. Its powerful network effects, which might be considered almost insurmountable today, will be slowly eroded. That threat isn't imminent, and the risk is relatively low, for now. Contrary to popular perception, Ethereum continues to lead the competition in virtually every meaningful metric. The very fact that ETH is the lone altcoin to have an ETF shows just how far ahead of the competition it is in some regards. Platforms like Solana are likely years away from mainstream financial products. But Ethereum cannot be complacent. It must not squander its lead, not while the crypto industry is so new and set to grow so dramatically in the years to come. Things can, and likely will, change much faster than many anticipate. Ethereum's head start, network effects, and long-term philosophy means it has a great chance of being the dominant crypto platform for the foreseeable future. But that success is not guaranteed. Ethereum cannot afford to let the bad vibes linger for much longer, and the upcoming ETF launch may be the best opportunity to dispel them once and for all. So that's it for today. Thank you so much for watching, have a great day, and I will see you in the next video.